Ladies and gentlemen, good day and welcome to TCPL Packaging Limited earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anup Pujari from CDR India. Thank you, and over to you, Mr. Pujari.
Thank you. Good afternoon, everyone, and thank you for joining us on TCPL Packaging's Q2 and H1 FY24 earnings conference call. We have with us today Mr. Saket Kanoria, Managing Director, Mr. Akshay and Vidur Kanoria, Executive Directors, and Mr. Vivek Dave, GM Finance of the company. We would like to begin the call with brief opening remarks from the management, following which we'll have the forum open for an interactive question and answer session. Before we start, I would like to point out that some statements made in today's call may be forward-looking in nature, and a disclaimer to this effect has been included in the results presentation shared with you earlier. I would now like to invite Mr. Kanoria to make his opening remarks.
Good afternoon, everyone, and thank you all for joining us on our earnings call for the period ended September 30, 2023. I trust all of you have had the opportunity to go through our results, documents which have been shared with you earlier. I will initiate the call by taking you through our business highlights for the period under review, after which we can open the forum to have a Q&A session. In this quarter, we are pleased to announce that we have achieved our highest ever quarterly revenue, which has surpassed 400 crores for the first time. This remarkable performance can be attributed to the encouraging performance of both our folding carton and flexible business segments. Despite operating in a challenging environment, our revenues in Q2 grew 12% year-on-year to 406 crores. Further, the EBITDA has grown 13%, reaching 65 crore in this quarter, driven by steady margins at around 16%. Consequently, our PBT has also grown to 37 crore, while our PAT and cash profit have come in at 29 and 55 crore respectively. Here, I would like to highlight that the Q2 profit figures of last year include an exceptional one-off income of rupees 17 crore received as an insurance claim. Adjusted for this, our profits have grown in line with our overall revenues. In a continued effort to fortify our board of directors, we are very proud to announce the addition of two new esteemed independent directors, Mr. Sanjeev Anand and Mr. Tarang Jain. Mr. Sanjeev Anand is the chairman of Cedar Consulting, a Forbes-ranked global consulting firm, and is a recognized strategy expert with over 35 years of experience in guiding boards, CEOs, and leadership teams and shaping strategies and transforming business practices, including those in the packaging sector. Mr. Tarang Jain is the chairman and managing director of Varroc Engineering Limited, and who brings a strategic vision that has propelled Varroc into a global tier 1 automotive component group, showcasing his 35 years of leadership marked by integrity and a strong commitment to corporate social responsibility, including active engagement in environmental initiatives. These appointments follow the significant addition of Dr. Blashke as a non-executive independent director earlier this year. We believe that the combined expertise and insights of Mr. Anand and Mr. Jain will enhance the strategic oversight and governance at TCPL, aligned with our dedication to upholding the highest standards on our board. Coming to key operational update, we are delighted to share that TCPL has successfully inaugurated a new advanced printing line complemented by state-of-the-art ancillary equipment at our Haridwar facility. This expansion is part of our ongoing growth strategy, with the Haridwar unit already operating at optimal levels. Following our operational enhancements, I'm pleased to share that TCPL's commitment to quality and innovation has been recognized with several prestigious awards. We have been named Print Week Magazine Printing Company of the Year and also received the accolade for the Innovative Printer of the Year 2023 from Print Week Magazine. Our subsidiary Creative Offset Printers has earned the Best Vendor for EHS Activities title from Samsung India, achieving a perfect score. Additionally, at the India Folding and Carton Association Awards in 2023, TCPL secured 6 awards across various categories, recognizing outstanding work in both folding carton and flexible packaging material. These accolades underscore our team's hard work and commitment to maintaining a high standard of excellence and innovation in the packaging industry. In conclusion, while TCPL continues to diversify through customer and sector expansion, we are mindful of the short-term subdued domestic environment in some of our key underlying industries. However, we remain optimistic about our outlook, keeping in mind the buoyant long-term trends in the industry. We are confident that the industry is poised for growth as India advances towards self-reliance in manufacturing across various sectors. By investments in expanding our capabilities over the years, we believe that TCPL is well prepared to capitalize on this opportunity. On that note, I would request now the moderator to open the forum for any questions or suggestions that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Harshal Sethia from AUM Fund Advisors. Please go ahead.
Hi, sir.
Harshal,
Hello.
may I request you to speak through the handset, please? There's a bit of an echo while you speak.
Hello.
Yes, go ahead.
So what has been the capex for H1 and what is our full year capex plan?
Full year capex plan is about 110 crores. Bulk of it has been done in H1.
90.
Yeah.
So how much?
It doesn't matter. I said bulk of it has been done. Please move on to the next point.
Okay. So secondly, what I wanted to know, what has happened in the working capital cycle that has increased to 100 days? So anything specific you want to call out?
No, there's no specific comment on that.
Okay. And sir, going ahead, could you give us a breakup in terms of what would be the percentage of exports in H1 compared to last year?
This figure we will declare annually on an annualized basis in the balance sheet. We don't declare this figure now in the half year.
Okay, thank you.
Thank you.
Thank you. Next question is from the line of Nilesh Shah from Julius Baer. Please go ahead.
Yes, hi. Are you able to hear me?
Yes, please go ahead.
Yes, hi. Yes, so I am I'm actually to your company and the specific industry you operate in. So perhaps I was hoping, if you can share a bit of context around the competitive dynamics of the industry in which you operate, right? Vis-a-vis, some segments of your clients, right? Who are your major competitors, right? Right. I mean, and I've also seen that, in recent times your growth and margins have held up very firmly. If you can also illustrate, has something changed in the vis-a-vis the, your industry from a competitive point of view? Thank you.
So the packaging industry overall, I would say, is quite a competitive industry, and there has been a lot of investment in this area over the last decade or so. And we operate essentially in two basic segments. One is the paperboard-based folding carton segment, and the flexible packaging segment, which is more film and thin paper. So in the flexible packaging segment, we are a smaller player, and there are a lot of big competitors such as Uflex and Huhtamaki amongst the listed few. And in the folding carton space, we have competition from various players across India, and essentially they are generally unlisted companies such as Parkson, Borkar, ITC, etc. So yeah, there's
What's the revenue split between these two segments?
No, so your question was on the margins, which is holding up. So I wasn't sure about
No. Sorry. I mean, before we get to that, if you can share some split between these two. I was going through your presentation and I was not able to locate it.
Yeah, the revenue split is roughly 15% flexibles and the rest is folding carton.
Got it. And I got it. And I see from your deck you are really spending a lot of time, I think, on the on the more consumer facing folding packaging side, right? Is that an area that you are actively trying to shift your revenue mix towards?
The folding carton side, we are anyways, but the majority of our revenue is from there.
No, so what I'm trying to talk about is, if I see slide numbers 2, 3, 4, right? So more consumer-oriented boxes like Fair and Lovely, Kesh Kala, Colgate, right? Is that what you call folding?
Yes, that's what we call folding.
So, and just to clarify, what is your share from this segment?
Excuse me, Mr. Shah, if there's a very specific questions on particular points, I would suggest you can get in touch with CDR and they can clarify later. Because, then we only have limited time on this call.
Okay, sure. I will get in touch with your firm that I directly. Thank you.
Yeah, CDR India, Anup is on this call, so you can get in touch with them.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Resham Jain from DSP Asset Managers. Please go ahead.
Hi, good afternoon, sir. So I have a couple of questions. So first one is with respect to creative. I think you have further increased your stake here. And you mentioned about this in the previous calls that this segment overall has been growing quite rapidly. Given the size of the company currently, it's relatively smaller given the size of the opportunity. So how are you looking at this business, let's say, over the next few years?
Yes, in creative, we have increased our stake, and I would say that very soon it will be 100%. And secondly, we are very upbeat about this business. It is growing in India quite rapidly. So the mobile and the wearable space are both in a growth phase.
Okay, but my question was, sir, currently it is whatever 50-60 crore business. You expect it to become substantial given your strength in the segment, or will it grow at like 15-20% range only is what I was trying to understand.
Resham, potential is there for further growth for sure, and it should grow at a faster rate than the company's growth for sure, and over a period of time should come to represent a meaningful share of the company's total revenue. However, obviously, we have to get it right in terms of tracking the relevant customers and doing a good job on quality and service and bringing new innovation to the market. So we will keep doing, and that's the endeavor. Obviously, we started in a very small way because this company it's a small company and was a distressed acquisition. So the learning period and turnaround time, to turn around the business was a bit of a long cycle. But we certainly see the future to be quite compelling now.
Okay. Just one more follow-up. As of today, I think the margins are a little lower here. But as you mentioned, with certain kind of reorganization and cost-related things, are you now confident of getting to the company level margins in this business as well over the next 1-2 years?
So here it's also again problem of scale and overall size. So we see that once we come to a more respectable, top line number, then the bottom line will certainly follow. Right now it's kind of getting eaten up in overhead.
Understood. The second question is on the overall balance sheet. I think you had a capex plus this acquisition. I think remaining stake has led to some increase in debt on one side. Obviously, earnings have also improved. But let's say over the next 2 years, is the overall capex you mentioned 120 crore for this year, but let's say 25, what will be your overall capex?
I think next 1 or 2 years, the capex plans are quite moderate. So we should have more free cash flow going forward.
Okay. So absolute debt should come down from current levels.
Yeah.
Margin.
It should grow for sure.
Okay. Perfect. Thank you so much and all the best.
Thank you.
Thanks.
Thank you. Next question is from the line of Nikhil Shetty from Nuvama Wealth. Please go ahead.
Yeah, thanks. Thank you, sir, and congratulations on decent set of numbers. So, sir, can you help us to understand how domestic part of our business is shaping? Because whatever growth we are witnessing, I believe it is purely driven by export.
Thank you, Mr. Shetty. The domestic segment has been under pressure. We have also had to bear the brunt of this decartonization of the liquor industry, which was a large contributor. So the bulk of the brunt of that has been borne in this half year compared to the same period last year. And in general also, I would say that the domestic industry is not growing beyond 4-5%. And apart from that, there's been a price reduction because of raw material prices going down. So coupled with this, overall domestic has been flat, and the growth has really come from export. You're absolutely right. Apart from that, our flexibles has had a good growth. So overall, it has resulted in the numbers that has been reported.
And sir, are we since we are in a festive season, so are we witnessing any green shoots in terms of demand in domestic market?
I think that this festive, till August it was very buoyant. But over the past month or so, I feel that usual buoyancy is kind of missing. And while there's obviously no decline or anything, but it's not as buoyant as we have seen in the past years.
Okay. And sir, next question is on InnoFilm. So how things are moving there, and can we expect a revenue contribution starting from 25?
So in InnoFilm, you probably are aware that we had some technical challenges with the equipment, which we have taken up with our machine and technology provider. They have worked on some partial solutions which are giving some partial benefits, but we expect that another few months it will take before everything is restored to what it should achieve. And in the meantime, we are also merging InnoFilm with TCPL. The NCLT order for that is expected very soon. So hopefully we will complete that during the current quarter. And yes, we are already using the plant for internal film requirement. So let's say 30-35%. And then we see that number going up, and the rest of the capacity will be for sale of film, which we are quite hopeful. So I would say that give us another few months, and in early 24, we should start getting some results for this investment.
Yeah, that's great, sir. And lastly, how much capacity we are adding to new line in Haridwar?
In Haridwar, we've added about 25%.
25% of existing capacity.
Existing, so overall about 20.
Okay.
Yeah.
Yeah, that's it from my side, sir.
Thank you.
Thank you, sir. Yeah.
Thank you. Next question is from the line of Janice Cheda from Spark. Please go ahead.
Good afternoon, sir. Is my voice audible?
Yes, please go ahead.
Yeah. So one question is on the addition of the 2 board members. So what exactly are you looking for from them, and how will they add value to the company overall?
They are very eminent people with lots of years of experience in their own respective field. So as an independent director, they bring a lot of value in terms of overall strategy and strategic thinking, and also in terms of governance. So I mean, they can add a lot of value, and we would hope that we can learn from their experiences and suggestions time to time.
So can you substantiate a bit in terms of will they help you get indoors for new customers, or they'll help you improvise your processes to cost reduction? How exactly will it happen?
I mean, see, they come with their own set of contacts and industry knowledge. So I can't give you some only one specific area. It is just overall advice, which is what we are looking forward to them. They are at the end not executive position. So it's more from a strategic and broad level advice that we could learn from.
Okay. And second question is in terms of your cash flow. I am seeing some 35 crores of fixed deposit with banks that has added up in the 6 months.
Yes.
So why is that? Like any specific reason?
So we have some foreign line of credit against which this money has been drawn in the current rest of the year.
So I mean, since our exports have increased a lot, and that is where this is helping us.
Sorry? No,
because our exports are...
This is a foreign line of credit for domestic capex.
Understood.
Yeah.
Okay. Thank you so much.
Thank you.
Thank you. Next question is from the line of Uttam Purohit from Monarch Network. Please go ahead.
Yeah. Hello. Good afternoon, sir.
Yeah. Please go ahead.
Yeah. So my question was around we had a very good growth this quarter. Just can you share the breakup of how much of it was value oriented and how much of it was volume oriented? Mix of value and volume.
It's difficult to tell you the exact number. Overall, the second quarter particularly, the volume growth was good. First quarter we had not such a great volume. It was more price-led. and this quarter there's been a price decline. So overall, I would say we can't give you a specific figure, but it is more volume driven rather than price driven.
Great. And also, can you share the update on the capex of the third line and the Silvassa plant? When would it commence?
On the flexible packaging, we expect to complete it during the current quarter. So hopefully it will go into production in Q4 next year.
Okay. That's from my side. Thank you.
Thank you.
Thank you. Ladies and gentlemen, you may press star and one to ask a question. Next question is from the line of Ria from Equirus Investments. Please go ahead.
Hello.
Yes, please go ahead.
Thank you for giving me the opportunity. My first question is in terms of the capacity utilization. Could you give the capacity utilization for both the segments?
On the flexibles, we are fairly around 80-85%, and the carton, I would say around 75 to 80%.
This is including the new Haridwar facility?
No, the Haridwar facility was only commissioned in September, so this would not include that.
Okay. And the second question is, we're seeing good growth in flexible packaging. So going forward, do we see the margins being a little subdued because our margins in cartons is higher than flexible packaging?
No, overall, I would say that in flexible have been outgrowing carton, and we have been able to maintain the margin. So in future also, we don't see that causing any kind of dip as such.
So we will be having similar kind of margins?
Sorry?
We will be having similar kind of margins in both the segments, more or less?
No, not necessary, but as a company as a whole, we feel that we can maintain current margin.
Okay. And in terms of raw material, we are hearing commentary from all the paper producers that the packaging paper prices, they are increasing, like some JK paper and so. So are you witnessing such instance, and how will it impact us, if at all?
So paper, certain grades of paper prices are going up, particularly in virgin grades, whereas in the recycled grades they're going down. So I think wherever it's going up and down, we have to pass it on to customers, and overall doesn't seem to be resulting into any major change in pricing.
And these prices...
sorry?
Hello?
Yes,
these prices are passed on with a lag of how much time?
Typically 1 quarter.
Okay. Okay, that's it from my side. I'll join the queue for further questions.
Thank you. Next question is from the line of Pulkit Singhal from Dalmus Capital. Please go ahead.
Thank you for the opportunity. Congrats on a great set of numbers and also for inducting such esteemed professionals to the board. First question is on the export side. You mentioned that since domestic was almost flattish this quarter, it seems that exports has grown almost 40-50%. I'm just reverse calculating it from the contribution last year. I mean, that's a very sizable growth. Just trying to understand what is driving it, and is it largely driven by flexible exports, or there's some other trends that are also helping?
Thank you. Overall, growth has been, you're right that the growth is due to not just export, but also flexible has grown, carton has grown marginally, but what's driving it is that we are across many segments, and we are also getting into new countries. For example, we've now entered the US, which will in future be a pretty large market. So there's no one reason really, but overall the effort is higher, and we are trying to see how best to leverage our strengths in product quality, which results in the acceptance abroad.
Understood. But when I look at exports, growth going ahead over the next couple of years, 2-3 years? Is it largely going to be led by flexible? I mean, the US opportunity is for cartons or flexible? I'm just trying to get that sense.
The US opportunity is more flexible, but there is some carton there as well. And the growth will happen in both segments.
Understood. And secondly, I mean, you did allude to, I mean, trying to get into the Apple supply chain for India. I mean, is there any progress there? Anything you'd want to highlight?
Specific information customer-wise, I'm sorry, we can't share.
Got it. Understood. Thank you and all the best.
Thank you. The next follow-up question is from Jainesh Shera from Spark. Please go ahead.
So one small question from my end. In the presentation, you have mentioned that improvement in your EBITDA margin was supported by better product mix and proactive cost management. So what steps were taken in terms of your proactive cost management? Can you just elaborate over there? I'm trying to understand.
Internal cost management, I can't share this information with you.
That's why I was continuing that I wanted to understand, is it a sustainable continuous basis improvement or a small one-time improvement?
There's no, I don't think it's a small one-time improvement. There's nothing exceptional about it.
Okay. So any process change or something, it's not possible to elaborate, right?
I'm sorry.
No issues. Thank you so much.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. As there are no further questions, I will now hand the conference over to the management for closing comments.
So thank you, everyone. I hope I've been able to satisfactorily answer all your questions. And if you need any further clarifications or you would like to know more about us, please do feel free to contact CTR India. Thank you for taking the time to join us on this call. We look forward to such interactions again in the near future. Thank you all.
Thank you very much. On behalf of TCPL Packaging Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.